One of the great things that we have right now, and this is so important for S&P and Dow traders, is that tech is finally double green. So then when we take a look at why that's so important, we see that if we take a look at the weighting of the DIA, we look at the fact that in the holdings of even the Dow Industrial Average, we can see that tech is the number one weighted sector within it, followed by healthcare and then industrials. There you have it. So the NASDAQ going double green is really quite helpful. Now, the Dow has been one of the better, more reliable bullish outperformers. So let's stick with that. I'm glad the NAS is giving us better clarity, but then we can be a little bit more specific to the long side of the Dow, knowing that we don't have to fight tech anymore. And the 13 EMA has sufficient prop dots. 5 is the minimum, and the 21 does as well. Now, this isn't a matter of which one. It's a matter of all. These are aggressive levels. One of the things I like about the 13, the point of control for November is sitting right there. So between basically 29,004 and 29,350, you've got a pretty good aggressive zone. Now, aggressive doesn't mean it's a low probability trade. It just means it's further away from the stop loss. That's all the word aggro or aggressive is going to mean to me when I write it down in my notes. That it's a more aggressive trade due to the distance from the validity of the buy overall. So then what I want to remember is that I can buy DIA calls. I can buy micros. I can put on a smaller position in the YM futures. I mean, this is the choose your own adventure part of the trade specific to risk. You don't want to take a big position on at this level, but if you want to put some skin in the game because you're fearing the market's really starting to go parabolic and a pullback like this may not be one that persists heading lower, it's a good way to put a little bit of skin in the game, but just assume you're going to take heat. All right. Then you could be a little bit more specific and say, wait a minute. IYT's been a really good outperformer, and then I can dig even deeper into the specific stocks within the Dow and the specific stocks within the IYT that are double green. This is still futures trading to me, right? Because what we can then start to think about is, well, FedEx, and that's the number one weighted stock in the IYT. The IYT itself is valid from the 13 and the 21, and this is the kind of stuff that, again, I call this a futures first way of trading. Everything started with the Dow and then expanded from there. Or if you want to look at it, the tip of the iceberg was the Dow, and you dive underneath the water and you start looking at more and more of what's connected to this narrative, looking for the very best part of it. What is your best structure? What's got a really good pullback? What's got a good affordability? For some folks, trading the options on some of the less expensive ETFs or stocks is a better way to go, is a better alternative. Something like CSX could be a really nice buy for some traders who want to put in a little bit of skin in the game, but not necessarily blow their budget on an expensive at the money or large position, which again, at aggro levels, you don't want to do. And in the premium video, we'll dive a whole lot more into the individual stocks that I'm interested in, specifically in the DIA and in the IYT. But I think both of them, the Dow itself, futures, DIA and IYT, are all tomorrow something I'll look at putting potentially a very small position, long position, in on maybe a little bit more weakness or a minor low or maybe even an inside day. So keep those ideas in mind.